Greetings, members, one and all of the Salivation Nation. 3 reasons why gold and silver dropped today. Let's explore. Indeed, we saw a fairly substantial drop today in precious metal prices, although we should not lose heart, because this happens from time to time, and it's all but predictable. And indeed, and that is kind of where we are at in the metals markets of one day to the next, and there's 3 good reasons why it had occurred today. But make no mistake, this does not mean that the fundamentals are not solid for gold and silver, especially with what's going on in the world and in our nation here in the United States today. Now let's take a look at a couple of different articles here. First one is from Jim Wyckoff over at Kitco. Gold and silver prices are sharply lower on midday trading Tuesday due to heavy profit-taking. Week-long liquidation from short-term futures traders were featured today after both metals prices hit around 4-week highs last Friday. The key outside markets were also bearish for the metals today as the U.S. dollar index was solidly higher. So there's 2 reasons there. Heavy profit taking and higher U.S. dollar index. And crude oil prices were lower, but I'm not really counting that so much as weighing in on the metals, although crude oil prices, oil does tend to sometimes trade in conjunction or inversely there with the metals. The safe haven metal bulls were sorely disappointed. Their markets could not catch a bid, and in fact sold off sharply amid keener risk aversion in the marketplace to start the U.S. trading week. October gold futures were last down $36.40 at the $1,795.10. December COMEX silver was last down about 43 cents at $24.38 an ounce. Let's look at the prices. Here they are, markets, and they're about to close as of the recording of this video as we refresh that page here. But that's kind of what we'll come back to that. Global stock markets were mixed and quieter overnight trading. The U.S. stock indexes were mostly lower in midday New York trading as it was time to get back to work for those North American and European traders and investors that had been coasting the past several weeks. We did see a glitch in the markets. I covered that in the video from this morning, recorded late last night, about silver spiking up to $27.50 for a brief time. Turns out it was an error found out literally in that video. Pretty interesting to see, though. These glitches are fascinating, and when they're documented and can be captured by the person who who wrote that article. Nonetheless, with U.S. stock indexes not far below recent highs, market watchers are wondering if those gains can be extended in the coming weeks during what history shows can be rocky times for the stock and financial markets. Market participants today may have gotten a taste of what's to come during the sometimes historically turbulent month of September. And here's where the prices are right now. Gold is trying to recapture some of its losses now. It's down only $29.10 to $17.94.90 per ounce for gold. Silver is down 35 cents, $24.41. Platinum is down $25. Palladium is down $30. So there is those 2 reasons why the markets are down, or why gold and silver are down. Here we can see the chart. And we can see that the key outside markets today see that the U.S. dollar index solidly higher as the greenback tries to recover from recent strong selling pressure that pushed prices to a 4-week low last week. NYMEX crude oil futures prices were lower and trading around $68.25 a barrel. The yield on the benchmark U.S. 10-year Treasury note is presently fetching 1.365%, and that brings us to the 3rd reason why prices are low, because of a higher U.S. Treasury yields. They put pressure on the precious metal. This article, again from Kitco News from Anna Golubova. The market is anticipating that Federal Reserve can continue to ignore rising inflation following a big miss on the U.S. employment front. And so higher U.S. Treasury yields is that third reason why gold and silver dropped so much today. Gold prices tumbled as Treasury yields soared higher on expectations of a delayed recovery would allow the Fed to tolerate higher inflation in the short term, said OAND senior market analyst Edward Moya. Wall Street is ever so slightly more concerned with inflation, and with the Fed tapering likely happening in December, the curve will steepen, and that should prove short-term negative for gold. December COMEX gold was last at $1,800.20, just barely above that level, down 1.83% on the day, while the 10-year Treasury yield was at 1.36%, and the U.S. dollar index was at 92.47. The August jobs report revealed that only 235 positions were added instead of the anticipated 720,000. Now, that very well could change. The end of this month, unemployment benefits run out for many across the nation, and so there are still companies that are chomping at the bit to get people to work again. That actually could turn around in favor of lower gold and silver prices, believe it or not. If that is the case, then then we may see these prices go low, which would blow out my prediction by the end of the year. If all these new positions are added because people realize, hey, we're not getting the stymie anymore from the federal government, we got to work, that could really increase those employment numbers. In fact, that's why, maybe one reason why the anticipation of 720,000 was for this week, because people were anticipating having to go back to work. Maybe they're just waiting till the last minute to do it. So we may see those numbers far exceed the next time around. We'll see. The slowdown in job gains could indeed mean a more patient Federal Reserve going forward, especially regarding the highly anticipated tapering announcement. The 235K NFP gain was very disappointing, yet it's not entirely clear if this is a supply issue or demand issue in the labor market. Well, I kind of explained what it probably is going to be. We've moved back the Fed's expected tapering announcement from the September 21-22 FOMC meeting to the November 2 and 3 meeting. And more likely, it probably won't be until then, for sure, because of waiting to see what happens with this Delta variant and employment situation heading into fall. Although there has been some talk about things shuttering down again because of the increased cases. If that's the case, then all bets are off the table, and I think we'll see no tapering, and we will see higher gold and silver prices. Back to my predictions. I hope that's not the case. I'd rather the economy open back up. I'd rather this thing go away. But this thing is going to be with us for some time. By this thing, I'm talking about the virus, sadly. But nonetheless, they're saying here that the gold could fall towards 1755, and if that level easily breaks, one last push lower could see prices target the $1,700 level again. This is what Moya said. Once the market can see past these few months of pricing pressures, the reality of global disinflation forces will likely put an abrupt end to the move higher in Treasury yields, triggering a resumption of gold buying for many investors. And by the way, the selling off of gold and silver is happening purely in the paper markets, the derivatives, because they're not really buying gold or silver; they're buying receipts that represent gold and silver. A representation does not necessarily mean it's backed by it either. The only one that I know of that is a Sprotts funds, the PSLV, and I don't know, it might have the same type of thing in gold as well. This week, markets will be paying close attention to the European Central Bank interest rate decision on Thursday and whether there will be any new tapering announcement from them. So this focus on the ECB and pressure on Thursday, and given recent hawkish comments, they're likely to announce a slower pace of bond purchases beginning in the fourth quarter, given niggling inflation. Niggling, interesting word there. In a debate over when to shift off crisis mode. There should be bullish implications for the European Union as the ECB tapers ahead of the Fed into the year end, which would continue to keep the commodity inflation trade in play. We'll see. It'll be very fascinating to see where this all plays out. But there's where the markets are today. The move there with these 3 reasons why gold and silver dropped. And what are they again? To sum up, as we look again at these prices, gold, silver, it is down. All the metals are down save for rhodium. And it is because of heavy profit taking from the paper derivative markets, stronger dollar index, which when we think about it, what does that really mean? The dollar strength is only as good as its neighboring currencies in that breadbasket of currencies out there. You know what I mean? It's crazy. And then we've got the higher U.S. Treasury yields. The third reason why gold and silver are down today. A buying opportunity? Yes. Will these prices stay low for a considerable amount of time? I doubt it. I doubt it kind of either way. But we'll see. But I think we could see them go lower if people start to go back to work when their stymie runs out. When the unemployment runs out, they've got to get back to work. Post your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch this video and to encourage you to please rate, share, comment, and subscribe.